Alright guys, thanks for joining us today on this edition of Yup, You're Approved. Today we're talking about non-warrantable condominiums. Now believe it or not, even if you're the best borrower in the world and you have perfect credit, your income is in line and your assets are ready to buy a house, you may still not be able to get approved for a mortgage. Not necessarily due to your financial situation, but due to the status of the condominium complex that you may be looking to buy. I'll give you an example. If you're looking to purchase a condo that happens to be in a complex which there is an owner that has 10% or more units in that complex, Fannie Mae, Freddie Mac, FHA may not approve it, and you could be in a position where you're a very well qualified borrower but you may not be able to get the property that you actually want due to government guidelines. So we're going to talk to you a little bit about that today. Ted Lyon's going to help us out, and he's out of town today, but he's here with us in the city. So Ted, what do you got for us?
Thanks, Adam. As Adam indicated, today we are talking about non-warrantable condos. Let's take a half step back and talk about the idea of condos being warrantable or not. Once upon a time, condos were very simple to finance. There wasn't much more required of them than a regular house. But when the housing bubble burst in 2007, 2008, 2009, Fannie Mae and Freddie Mac wound up with mortgages on a property that would be surrounded by a ghost town. They'd done a mortgage for a person, the person was in great shape, but the development never got finished. Or half the owners threw in the towel and gave up the ghost, and there's all of a sudden you're surrounded by empty buildings. So Fannie Mae and Freddie Mac got their heads together and said, okay, let's come up with this list. It's a questionnaire, it's about 30 different questions that they ask about a condo development to make sure that it's warrantable. And that warrantable means that they'll do a mortgage on a property in that development. As Adam told you, one of the sticking points can be if one person or entity controls more than 10% of the units in a given development. I actually had a situation just like that. It was in Birmingham. There were only 18 units in the condo complex, and one gentleman owned one property they lived in and had another as an investment property. Well, 2 out of 18, that's more than 10%, and we were in a situation where we were not going to be able to close that particular mortgage. As it was, he sold his investment property and we were able to get it done. But otherwise, we would have just been in a situation where I would have had to tell my buyer, you're a great person, you're in great shape, we can't do this just because of the development. So when we talk about portfolio loans and non-warrantable condos, what that means is if one of those 30 questions comes back wrong, we're still able to look at the situation and perhaps help someone by giving them a mortgage in a development that otherwise they couldn't get a mortgage on. Lots of times you'll look at different developments and they'll say the only kind of offers that they accept are cash. And the reason for that is because they don't think anyone will do a mortgage. We're helping you kick in the doors to those different places that are closed to every other type of company, every other type of mortgage, and get you approved.
Awesome, Ted. Well, that really helps. I hope it helps the folks out there that may be stuck and wanting to buy a non-warrantable condo. And typically, you're not going to find this opportunity with a bigger company. Folks that are outside of Michigan, feel free to ask your realtor who may be the small town lender that may be able to help you out with this. But of course, here in Michigan, feel free to reach out to us. You know where to contact me and Ted. And look forward to seeing you again soon on Yup, You're Approved.